Okay, we've got the number. It's come in at minus 2.36. I had a hunch it's going to be a minor positive, in the sense it will not be as bad as the poll made it out to be, because we did get some sense from the CPI that the core inflation is stabilizing. It is the food angle that's been a disappointment, or that's falling. I mean, it's good for us, but that was to be expected, that we should be getting a wholesale price inflation number which will be slightly better than the 2.65 negative that we got in the previous month. Actually, we've been getting a fall in prices for the past 5 months. This will be the 6th month. November was the first month when we started getting a minus in the WPI price. Remember, the WPI index is heavily weighted in favor of manufactured goods and goods which are imported, landed goods. We call them tradables in economics jargon. And those have been falling, as we know, globally. Iron ore, coal, metals, chemicals, they've all been falling, and that's reflected in the lower prices. Okay, we now have the details. What's done? How about food? Food articles is plus 3.8% year on year, and it's just 0.5% higher month on month. Within food, cereals has fallen both year on year and month on month by 0.5% month on month and by 0.13% year on year. That's very important. We have come out of an unseasonal showers in Rabi, and our Kharif, at least sentimentally, should have been affecting the prices because it's supposed to be a lower Kharif. But cereals, no damage at all. So good management of stocks, perhaps, or psyche. What about veggies, which is the usual misbehaving entity? Vegetables are up about 2.95 month on month, but minus 5.5% year on year. That again indicates a fairly decent management of both pricing psychology, pricing expectations, and goods. Pulses is the one that we always expected would be the sore point. It is up 7.5% month on month. Even that is a fall year on year by Pulses is up 23% year on year and 7.5% month on month. Those were the ones badly affected by the unseasonal rains. Even in the CPI, we saw a 16.6% rise in Pulses, so that shouldn't shock anyone. Okay, let's go from food to fuel. Fuel correctly month on month was expected to be a little nasty. It's 3% higher because we saw that sharp hike in petrol and in diesel prices. And year on year, however, it continues to fall 10.5%. Manufactured products is positive month on month. That's important. If I'm not wrong, last time we got a negative even month on month of 0.2%. This time it has risen month on month. Again, an indication that somewhere we are bottoming out on the core, on the tradable, the global prices, as well as the complete lack of demand that was pulling down wholesale prices in India. So this may be the last of the worst number of the bad numbers. You know, the 2.65% negative we saw last month, maybe the worst. It's 2.36 now. Expectations are that it should get into slightly better performance. Maybe still minus, but a much lower minus in the months to come. Within manufactured products, edible oils prices have fallen month on month. That counts as manufactured, though it's a food item. Among others, it's only wood product. Okay, big falls have come in leather and I think rubber products, minus 0.2, and year on year those have fallen 0.5%. Man-made textiles and textiles in general have fallen about 3 to 6% year on year. But month on month, it's a minor fall. Yes, man-made textiles have fallen by 1.5%. 1 minute, manufactured products. Okay, that's right. Sugar has fallen, which is the one that's fallen the most. Iron and semis. So iron ore, steel related products have fallen. Basic metals and alloys, again, they are priced off the landed products. That's fallen by 0.1% month on month, 3% fall year on year. That is the impact of global prices on Indian products. The unfortunate number really is cement. Minus 1.5% for the second month running. We were in minus even in April. That's unfortunate because normally the pre-monsoon months are months of high consumption, but this is probably because of government expenditure reduction and the basic slowdown in the economy. Cement remains a sore point. Chemicals is the one that's okay. That's done slightly better. It's
I think chemicals is minus 1.44.
Chemicals, that's year on year, right?
Versus April, 1.63 in
Okay.
April.
Month on month, chemicals has risen by 0.1. Year on year, it probably has fallen, you're right. Okay, so minus 1.4 is right,
Yeah.
minus year on year, but month on month it has risen. Again, indicating that, month on month things have stabilized a bit. Year on year, they continue to fall. That is the story of the manufactured products. So my sense is that the wholesale prices are indicating a little bit of stability in manufactured goods. They are falling at a falling pace. There is still some fall. But let's now defer to the experts. Rupa Reginitsulu, Chief Economist at L&T Finance, is joining us, as is Aditi Nair, the Senior Economist at ICRA. Ladies, welcome. It's an all-ladies show. That's nice. Rupa, your take first. Do you think that even the WPI, despite the negativity, is showing some bit of stability in prices? Not return of pricing power, at least a smaller fall in prices?
Yes, minor build-up in inflation we are seeing, and as you very rightly said, in most of the manufactured products components it is getting reflected. Barring the few exportables which are facing negative global demand, rest of the manufactured product prices we have seen some improvement sequentially. So I think like in the case of CPI, there is some firming up of core inflation. Of course, part of the increases because of higher petrol and diesel prices, which got translated into higher transportation costs. But on the whole, yes, disinflationary tendencies are receding, and we are seeing some build-up of inflationary pressures. And of course, as we had seen also, the statistical base was more favorable in case of CPI than WPI. So this was expected, and as you rightly said, situation is stabilizing.
Okay.